Well, hi folks, it's Stratman here from pitware.com. Today I'm going to talk about a trade I did during my night. Typically I don't like to leave trades on overnight, but I have been doing exceptionally well every day this month, and I just saw an opportunity and thought I would take it. Very small risk, but it ended up being 140 pips in the end. So with a 140 pip trade, it's something that I don't do often, and thought that I might just discuss a little bit about how I entered this and how I exited the trade, in the hope that it may help some of you. Clearly, if I was looking at the dashboard, what was yesterday, this column was what I was trading with. We've just started a new day here, and during the Asian breakout area we'd already done 148 pips. Now normally, 111 and even lower than that is typical. We've had some exceptional moves over the last week or two, and so we had a lot of volatility there. We'll get back to this shortly, because that's something that I used particularly for exiting my trade as well. But I was looking at the trend here, and the idea of trend is to identify whether we're getting higher highs and higher lows, or lower highs and lower lows. Now clearly in this instance we got a higher low here, which kind of suggests that we might be getting a uptrend change. We've been in a downtrend prior to that, but the next high after this high didn't exceed it, so we entered a lower high there. But then I'm looking for the next lower low. So now we've made a lower low compared to the last two lows, and we've made a lower high compared to the last high, and now we've made another lower high. So this is a downtrend. That's how you identify the trend. So with this being a downtrend, what we want to do is enter a trade always on a pullback. So the trend direction is down, pullback is up, so we want to get an optimum entry into that. So one of the things that looking at this, I'm looking at this on the M5 just at the moment because it points out another thing I look for as well. One thing that's really nice to look for is when you get a nice curve. If you draw a curve all the way over the tops of these candles, and I mean a curve of best fit really, you can see that this is curving over, curving over, curving over, and then it's going down. Same thing here, curving over like this. So we're kind of looking at price action without even looking at moving averages or whatever on the main chart. I do look at moving averages down here. This is my SMA 60 on the time frames, and so at the time I was very aware of where things were at, and I could see we were doing a slight bounce of the hourly SMA 60 as well when we were coming around here. So anyway, how did I choose my entry? Well, I was looking for a pullback. I saw this pullback extremely here, but then got rejected very quickly back to a round number. So if we just plot on there, this is about 111, which is a round number. I'll just show you where that is. Okay, so over here is 111, and see how prices come up to here, bounced off there, then tried to break through, and this is what I call a fake out instead of a breakout. It's tried to break through, but it's been immediately pulled back. So to me that's a sign that we've got definite weakness here, and we could be ready to form a top. And with it being on a round number like 111, and 111's been quite good resistance and support along the way as well, and with the downtrend there, it's time to start looking at entering a trade. Now I didn't enter right on here. I wasn't really sure what was going to happen after this point, but as soon as I saw that this next candle comes down and goes below the previous candle, I know that we're looking at seriously getting into this this being the top. So I didn't want to enter here because my stop would have been quite large, and you know that I only like small stops. So what I did was I waited for another pullback, and this candle finished up here, and I thought look, I could wait for it to try and hit here again, but if it doesn't quite make it, I won't be in the trade, and I can put a stop just above the 111. So that's what I did, and so we entered the trade on this candle here, and basically it just meandered around a bit, and you know, I was happy. 10 pip stop, we're fine, everyone's pretty happy with that. And I went off to bed, and during the night all this kind of happened down here. Now my exit was interesting because when I woke up this morning, we were kind of, we'd come down way down to here, which is about 109.4, and it had pulled back all the way back up to almost 110. So another big round number here at 110, so we'll just quickly put that on there. So 110 is sitting about here, so we can see that that's good support there, and it's been good resistance there too. So we're well under this point here. So I thought, well, I've already made basically 100 pips at this point. So what we'll do is we'll let this run down a bit more, and I was in here. So what I did was I actually put my stop just above this point here, and then just let this kind of carry on meandering down. Now if it had broke the bottom, I would have been looking at you know, making lower lows again. I'm seeing that we're making lower lows already here and lower highs. So if we had broken the bottom, I would have been into an even longer term trade. But as it was, it came down and it started turning back at this point here, and I was kind of concerned that, you know, we're flattening out. We've got support at this point based on these candles and just here, and we're around the 109.50 mark. So I thought potentially this could be the point of turning back up. So I was also looking at my dashboard here, and I could see that the average daily range was up at 257, you know, 260 at the time, and you know, the average for the month has been 280. Look, the potential for another 20 pips underneath this. Am I really going to risk what I have already just for another 20 pips below here? And I thought, no, I don't think that's a good idea. So the dashboard helped me understand that. Also, my entries were based on looking at the moving average distance to the moving averages when I entered the trade. So I mean, good trade in the end. And so all the way from there down to there, let's look at another couple of time frames. So if we just go out to the M15, we can really see that what I was seeing on the M15 was this big spike bar here was the really important one. We got this huge spike up, and that said to me, look, you know, price has definitely been rejected at this point, which is the 111. We came back up and hit that point again. Well, we hit the point where just under the resistance I'd drawn at 111, and that's where I entered. And you can see what was happening down here, and so I got out just as I saw this little, you know, this kind of bar here suggests that this could be the end of the trend, and so we got out just as it came above that bar on M15. If we go out to the H1, which is where I like to do most of my analysis, it was quite clear that we're in a downtrend. We made a lower high here on the H1. We just had this spike here, rejected back down, and we do our entry. And then we'd hit this bar here. I'd seen that the next bar had come down to this point here and come back up. So I thought, well, instead of wasting heaps of profit, I'd get out at that point. So all in all, very good trade, and you know, maybe you got something out of my description of how I entered and exited that. Not sure. As it turned out, it did carry on downwards, and I could have made a few more pips, but that was basically into the new day. And I thought, I'm with Oanda, and the spread increases at 5 PM New York, which I consider the end and start of the day. And so my spread was just starting to increase, So I thought, look, I'll just jump out at that point. It made perfect sense to do that. So another reason to get out. So all the reasons were we'd made 260 for the day, and 280 is the norm for the month for the last 30 days. We've got we've got a kind of like it's hit a bottom here and pulled back, and my spread on OENDA was just about to increase substantially. Okay, so that was 140 pips, and hopefully I'll do another video shortly which explains something about reversal candles, which I use quite a bit. Thanks for watching. Please consider looking at the dashboard as a weapon for yourself. Very affordable, certainly making me pips this month. We're beyond 60%, so well pleased with my programming efforts. Cheers, that's Strapman out.